Good morning, everyone. It's Thursday, February 23rd. Sorry if there's some background noise, but big news items for today. Intel cut its dividend rate for you boomers who are still invested in Intel, even though it's down from like 52 or 50. It was not a dividend aristocrat, which is a company that has had and increased and never decreased dividends for 25 years or more, because in 2014 they froze their dividend. But and it's still not a dividend aristocrat, but it cut its dividend 65%, and as a result was down like 2%. But back up. The more interesting story, however, is FOMC minutes, which caused markets to tank around 2 o'clock, indicating the same thing that Powell has been saying, literally forever, that interest rate hikes are likely to continue longer than people expect. And so that's what we're seeing. But that being said, welcome back, everyone, and looking forward to hearing all your thoughts.
Yeah, Nvidia crushed earnings. I just learned that today. So that was exciting. And their gaming actually lost money. So that portfolio side lost money for them. And interesting enough, they still beat earnings. Quite surprising, as well as Baba beating earnings. Heard that earlier from Edition of Darkness. And so thank you for that insight. But yeah, that's awesome. So it looks like the semiconductors might go up today, hopefully, and continue going up.
Hey, regarding go ahead.
No, go ahead.
Well, I was just going to talk about Intel's gaming division. I don't see their division growing. I mean, for the gaming side, I think they're just going to continue losing money just on that side. They might still beat earnings, like Elliot said, so that might happen in the future. But as far as the gaming division, I don't think there's going to be any growth to that. I mean, they're against what AMD and Nvidia on that, and they're behind on the graphics card when it comes to the gaming side. So I just wanted to share that point.
Oh, thank you very much. Do appreciate that. Oh, sorry, go Waffles. Go ahead.
Oh, I was just going to start talking about the interest rates. Basically, my thesis is, the market was rallying yesterday up until about like 1:30. That rally, I think, was because people were hoping for some dovish insight from the minutes. Ultimately, as we saw, it wasn't dovish, but it really wasn't that bearish, in my opinion. I think that, as you said, Powell has been mentioning more and more rate hikes over and over. So ultimately, my play out of all of this is I'm going to be doing a call credit spread, basically going for about 2 weeks expiry. I don't know what type of premium I'm looking at, but I'm going to aim for about 410 as the bottom of that strike.
$410, okay. Why not? Just want to get your thought on this. Why not just at the money? You just want a bigger payout, or?
At the money is more risky, so I think 410 as the bottom. So that's currently SPY's at 400, I think. 410 gives a lot of extra room. It's going to be a much smaller premium in that regard. So, yeah, it's going to be less premium, but much less risk based on just how far it'll move.
So it looks like U.S. jobless claims came in at 192,000 versus expected 200,000. I believe prior was at 194,000.
I think PCE came in higher as well, which is what the Fed watches pretty closely, maybe more than CPI. So
Yep.
I think there's going to be more rate hikes. I mean,
all I know is I don't think I got enough sleep because when I first saw the title of the talk, I thought it said incest.
He immediately raised his hand.
No, I'm not from Alabama.
But you do work at Walmart, so.
I definitely feel like there are some people who have mirrored a bit too close to the family tree who go there.
But I do
Hey,
love my Walmart.
the best Walmart customers are the ones who say they don't go to Walmart.
Oh, those are the ones I wish would stop coming to Walmart.
Yes, sir.
I literally got yelled at by this one lady because she did get her refund the way she wanted, and she's like, "This is why I'm gonna stop shopping here." And I know she's completely full of it, and she's gonna be shopping there again this week.
Did you tell her see you next week?
No, she hung up before I had a chance.
Okay, so anybody want to talk about Brainerd leaving and now it's more of a hawkish tone in the Fed? We got Bullard saying he wants to go up to 5.5 or more in interest rates.
Well, I guess if you take a close look at the minutes that were released yesterday, so they haven't mentioned any pivot. First thing. Second thing, there were more than two people who were supporting the 50 basis point hike. So there might be more harsh tones going into FOMC this year. I mean, this next month. And with Brainerd leaving, it's going to be a disaster. So
I think the Bears are pretty happy now that Brainerd's leaving.
yeah, and the Fed Watch tool had increased the chances of 50 basis points by 24% yesterday. But with PCE coming in hot today, so it might even go up today. So
So
Okay,
with what
looks
you
like
just
that.
said, oh, sorry.
Oh, go ahead. Now I was just gonna go to plays.
I was gonna say with the fact that you just said that that 50-point basis hike, that two members are saying that they'd like to see that happen, and as you said, PCE came in hot. Um, I guess a pretty good play here would be, especially for the next Fed meeting where they're gonna announce the next rate hike. Definitely get puts. The question is, do you want to get them this early because of theta?
I would totally go for QQQ puts rather than SPY puts because tech has been rallying pretty hard, and with Nvidia coming in with better results yesterday, so maybe um, 30 or 45 days down to expiration puts on QQQ around 260, between 260 to 270. That would be my price target.
I know the IWM is like the Russell, but a blend of value and growth. Is there an ETF that tracks like Russell growth? Because I feel like the unprofitable tech, especially in the lower market caps, really ramped. At the beginning of the year, I would expect them to get hit like pretty hard on the thought of not only pivot not being part of the discussion, but maybe increased and additional rate hikes for longer. So does anyone know of the ETF ticker for like the Russell growth?
Other than IWM, no.
I guess ARC would be a proxy.
Yeah, IWM or ARC.
Yeah, I mean, I like small cap value though, so I'm not trying to get that part of the IWM, but I've got puts for some time now on like UiPath, and I'm looking at a couple other ones that are those high growth sort of Cappy Wood type stocks. Because I think all the news we've been talking about this morning would signal pain for them. I think the problem with QQQ is you got a bunch of really, pretty resilient, really large cap tech stocks, and I think they still have cash flows coming in, so they're going to get hit less hard than the guys who are still trying to break even.
Well, the problem with QQQ was all the tech stocks are highly inflated right now. So if you look at all the major earnings, they all pretty much missed it, but still the market was in a unprecedented bullish rally. So that might be the first sector that can go down compared to all the other highly, inflated ETFs like SPY or Russell's, I would probably go with QQQ puts rather than SPY puts because SPY is a combination of health and utility and materials. So
What do you think about puts on ARC as opposed to puts on QQQ?
I would watch ARC closely because Tesla's Investor Day is coming up on March 1st. So Elon's a wild card, so you really don't know. It can go down, it can go down, go up. So we
I was
can't
gonna
have
say,
a
I thought puts on ARC was always the safe move to go.
What's the difference between buying puts on QQQ or just buying SQQQ?
well, puts on QQQ, you have a time factor to deal with, while as SQQ, you can just hold on to shares. So there's no time limit.
Wouldn't that be less risky if you can sell at any time versus having a set time limit?
Yeah, I mean, if you look at the risk to reward, I would go with SQQQ compared to the QQQ puts. But hey, this is Wall Street bets. So
Fair enough.
I don't think the SQQQ and those like triple levered funds are meant to be long-term holds.
yes, that's a valid point. So you can't hold them for long, as latter just referred. I would also watch out for the two Fed speakers that are going to be live today. There is Fed Bostic speaking at 11 a.m. and I don't remember the other Fed speaker. So the market might be influenced by those words.
Yeah. So, what do you guys think about today? We got some Fed speaking, two of them. Just curious what you guys' thoughts on that are, as well as jobless claims. If anybody wants to comment on that.
I'm more curious on anybody picking up some strangles before the Fed meeting or before the minutes today.
I was actually about to ask that question, going for a strangle here. Would the play be get a strangle, hope that there's a lot of like volatility, it goes up and down, and you sell either leg? Is that the play?
No, that's usually the play, but I think you sell both. You're just hoping for a large swing that can offset one of the losing legs, and then sell both legs pretty much and come out with a profit for the strangle. Normally, you don't sell one leg unless you're planning on rolling.
Well, if you're going to play a strangle and not just a put or a call, then you've got to have some thinking as to why the markets might go up.
Well, if you're doing a strangle, the markets can either go up or go down. You just need a big movement. And like today, some people get lucky and get it. Some people don't before the minutes come out. It just depends how big the market moves. And lately, the market has been moving a lot.
Yeah, I guess what I'm asking is like, do you have a rationale why it might go up?
Oh, me? No, I'm mostly a bear.
The outlook by whoever is speaking today, they might sound quite dovish, and what we have seen from the market is that people react off of emotions a lot. So that would be one reason that it could go up.
Yeah. Also, the market has a big tendency to inverse me, so pretty good indicator right there.
Also, let's not forget that GDP Q4 first revision will be released at 8:32 as well.
Oh, don't tease us.
You said 8:32?
Yeah, I said 8:30.
8:30, yeah. Right with initial jobless claims.
Today?
Wait, so that was released
that's
already?
correct.
So it already happened.
So what's the number?
I was hoping that one of you find audience members will be able to tell me that. As an audience member
Apparently,
myself, I do not know.
They were not prepared.
Yeah, Elliot's hitting us with the past. Let's see here. Who in chat knows?
The GDP numbers came in at 2.7% compared to the 2.9% from last quarter.
So based off
So
of the
that was the
initial
revision?
estimate. Oh, sorry.
Oh no, sorry. Sorry for walking over your waffles. Go ahead.
No, you're good.
Yeah,
I
the
was going to say,
GDP
based off of the initial estimate, that still is above what was initially projected, I believe. Is that correct?
the forecast was 2.9%, and it came in 2.7%.
Oh, so we're
So-
actually looking down. Okay.
But the
Hmm.
GDP sales for Q4 has gone down drastically. It went down from 4.5 to 1.2%. That might freak out the market a little bit.
This was the revision, right? Just to clarify.
It's the GDP sales. I'm not really sure about the revision there.
No, Elliot said something about a revision coming in.
Yes, it says on the I'm looking at marketwatch.com and they're talking Thursday, February 23rd at 8:30 a.m. GDP. It will be a Q4 first revision. So I guess I'll have to do some searching real quick. Unless one of our fine analysts that are sitting in the Discord want to pop in and say something real quick. We can check over there as well as in here.
Keep in mind, guys, revisions, they mean a lot nowadays. A lot of rounding errors. Oh, they're saying 2.7 GDP with a 2.9 estimate.
Yes, that's correct. It was forecasted at 2.9, but the actual number came in at 2.7.
Hey,
So yeah, if you have puts, they're definitely going to make some money today. At least that's what I would
maybe,
believe.
yeah. Yeah, I
Well,
would love to think so.
Well, if you look at the market has gapped up after us yesterday, but it's going to where it has ended yesterday. So Theta wins.
I don't know, man. Maybe you missed what happened this week. Yeah, a lot of bulls got hurt. Who knows where the market's gonna be?
Well, I would totally wait for the Fed members to speak in. As I said, like 2 speakers are going to talk today, and Bostic is not a voting member, but I don't know about the other Fed who is speaking in today. I had to check my calendar, so
Mary
based on
Daly
their
from San
comments.
Francisco.
Oh, it's daily. Okay.
All right, guys, let's talk about some dip plays. Anybody buying dips? I know Tesla has had the run up. Anybody still buying calls or bullish on Tesla? Or somebody in the chat said Lucid. I know there was a Tesla post. Somebody put in 60K, I think, on Tesla calls recently after the run up. So hopefully that does well. But then again, it's always a good time to buy calls when a stock has run up to 100%, right?
Yeah, exactly. I think today SPY is going to tell us everything. Also, kind of curious if the market will kind of price this in already, or if we will have basically a pullback just due to all the social sentiment of expectations. We might even just have a downward open and then recovery within the hour. But who knows? Could be anyone's game at this point.
I'm starting to think those zero DTEs every day that the CBOE released, The markets have been very volatile since then. Intraday.
Does anyone here trade those? Do they work?
Zero DTEs? Absolutely. A lot of people here trade them. Do
They're
they
awesome.
work? I don't know.
Well, I would say they're good for scalping. So if you just want to get away with some quick profits or like quick losses, zero DT is the way.
Best way to quickly get a loss easily.
Or some could say it's the best way to get 1,000% returns. It could be both.
You got about the same odds at a blackjack table.
Good morning, everyone. How's my mic sound this morning?
Sounds pristine, crystal clear.
Sounds like you're in a rainstorm.
Just don't want it to be too loud. I'm actually driving, but I am looking at buying some more Tesla shares in preparation for next Wednesday's shareholder event, and maybe hedging those with some puts dated out for 2 weeks from Friday, for March 10th or something.
So since you're getting a bullish position on
yesterday.
Tesla,
Pardon me?
what are you, anything specific that you're expecting on the Investors Day that would really move your stock or Tesla up higher? Because it's had a pretty good run up. That's given.
It has. The run up, I think, up to now has been mainly based on their positive earnings results, for the most part, and then the momentum that they got from that. But sounds like.
And we lost him.
So solely because that guy had a poor connection, I'm buying puts on Tesla expiring March 17th.
That's fine. Sorry about that. The topic of the shareholder event is sustainable future, or something along the lines of improving the sustainable energy, a brighter future, or something like that. So there might be some announcements, and Elon kind of hinted at this during his shareholder meeting, that there's some upcoming products that they're going to be announcing, that he didn't go into great detail when he had the earnings call. So I'm guessing they might be announcing some new stuff, or some new business opportunities that they're looking at. So I'm guessing there's going to be, I'm betting that there's going to be a little bit of a run up after the event, and then maybe some downsies afterwards. But yeah, so that's the play on that. And then I'm also looking at leaps on Amazon, because yesterday they completed their acquisition of One Medical, which is a subscription-based healthcare service that you can subscribe to, that gives you access to physicians 24/7 via mobile apps, and it provides a lot of services to help keep you healthy. I'm as far as my thesis on preventive healthcare goes, it fits right into my thesis. So I'm looking at leaps on that. And then something I'm doing a little more research on is Apple also announced that they can now they've made significant progress on integrating glucose monitoring into their Apple Watch without requiring a pinprick, or without attaching a disc to your arm to measure your glucose level. I think that's going to be huge. I don't know yet. It didn't mention in the article whether or not they've done anything as far as getting FDA approval on that, which they are going to have to do, because it's a medical device and it's going to provide medical information. So I'm going to do a little bit more research on that, but depending on how that goes, I might look at some leaps on Apple as well. Those are my plays.
So the rumor is
Amazon play.
that
Oh, sorry.
rumor is with Teslas, they might be coming out with a Cybertruck.
But they are coming out with a Cybertruck. I mean,
Like
the Cybertruck is.
Yeah, rumor is they might
I'm
actually start selling it this year. But there's also a rumor that they'll have a cheaper Tesla that they'll be showing at this event. But more than likely, this event is mostly about battery and less about cars.
Well, there's also the rumor
Okay.
that they might have a car that's $69,420.
They had their
Well,
engineering headquarters meeting. Sorry, they had their engineering headquarters meeting last night. Like they had a live stream, and he did mention Cybertruck is scheduled for this year.
okay, so we're pretty much the consensus is we're gonna get a tease of new products, as well as you guys are hoping for some solid plans for existing products that Tesla has for Investor Day.
Or at least
Because
previously
that's pretty much what
announced
I'm looking at.
products.
Correct.
Which all mean
Okay.
the stock should pop, right?
If I'd like to think so, if he's talking about mostly on existing products or products that he teased before, for example, like the battery, any solid improvements on the battery going forward, or anything he's doing, or on current Tesla models, on that, like those type of things.
Yeah, like if he says that they've got a new
But
solid state battery coming, or he gives a like firm like July 15th, the
like an actual
Cybertruck
plan, yeah.
will start rolling out, or he's like, these robots are going to be in your house in 2 days. Like, unless he has really firm stuff, I think it's going to drop afterwards. But yeah, I mean, if he says like the Roadster is coming out August 15th, the Cybertruck's coming out July 16th, yeah, it's going to fly up from that.
Well, that's why I'm buying the shares. Exactly why you said, because like I've heard a lot of people talking about how they've lost money doing Tesla options. So, and I don't want to put myself into that group. So I'm just buying the shares. And if it goes south for a while and I have to sit on the shares for a while and sell covered calls on them, I'm fine with doing that. I mean, I'll have the shares. They're not going to lose much value, I don't think.
I'm expecting it to be more about Cybertruck because yesterday they also had them like on the floor, but they didn't have it shown to the public. Only people at the event. It's a closed event.
Well, I hope it's like, yeah, I hope one of the tops is the Cybertruck because he's been teasing it for a while with no solid information on it. Hopefully now there is some solid information, an actual plan, an actual, outline of what he's planning on doing with that.
Well, I mean,
Um,
he's got to do something because how many companies are selling electric trucks already? Like 3, 4. Stellantis is coming out with theirs.
I seen a Rivian the other day.
Yeah, I saw a really nice Rivian.
Rivians don't
I mean,
count. The first Rivian I saw was on the back of a tow truck because it broke down.
but I mean, he's got a point there. When they announced the Cybertruck, there were like 0 electric trucks on the market, and now there's like what, 4?
Well, although the Ford one, the F-150 Lightning, that one has been the shipments and production of those has been suspended because of some battery issues. So it might be down to 3. And then the F-150 Lightning, as far as Ford fanboys versus Tesla fanboys goes, that was probably their biggest competitor. Like, I don't think Rivian was considered a big competitor of theirs because they just don't have the production volume that Ford or Tesla have. So I think it's really between Ford and Tesla.
I mean, not to mention the front end of the Rivian just looks stupid. It's like a Miata truck, but the F-150 Lightning is a very good looking truck. It doesn't perform exceptionally well, but those things are selling for $50K over markup. I mean,
and Ford. Yeah, and Ford has a large base of like I said, people that they'll buy Ford till the day they die.
No. Remember what the CEO said last week of Ford. He's going to keep going on the path of EV, but he's losing a lot of, he's losing a lot of earnings on that. He's losing a lot of money on that, revenue on that, on the EV side. So he's going to subsidize his EV division with his regular, normal regular sales of his gas-powered vehicles. So
yeah,
that's more of a long-term play for him.
Yeah.
But I don't see any profitability on the EV side for Ford going, so soon. It's going to be a long-term play that he's doing.
Morning, all. Yeah, and they've had a separate battery issue besides the other one that we spoke about last week when they got the mix supposedly right now. So, yeah, they're still learning. So I agree with... That's a long name. I agree with last guy who said something.
Let's talk about Apple. Let's talk about those Apple calls you had, human genome They're at the money or out the money? And why do you think this is going to be good news for Apple with that new technology that they had
So
for
right now,
that blood?
So right now, so diabetes happens to be one of the major comorbidities with cardiovascular disease, high blood pressure, and kidney failure. That it's one of the top 3 diseases in the United States. Now, the thing about diabetes is that in many cases, it's preventable, right? You can give somebody diabetes, like Coca-Cola, it gives you diabetes. Sugary stuff gives you diabetes. You can give somebody diabetes, which means that you can also prevent people
Well,
from getting diabetes. Now,
let's
let me
rephrase
let
that.
me.
They give their own self diabetes. I mean, through their own diet. Like, can't
Right, that's
give
correct. That's
somebody.
correct. That's correct. But those are the products that people consume. So let's rip the Band-Aid off on that one. But up until now, you can't really do
I'd
that.
also like to point out that that's specifically type 2 diabetes. You also have type
Yes,
1, which is the body just is not producing enough insulin on itself.
that's correct.
Gino,
Absolutely.
it sounds beautiful there, but it's kind of loud with your mic open.
Sorry about it. The
That's
so
why I
the
don't call when I drive. But anyway,
Let him finish his point. Hold on.
the with diabetes, up until now, people haven't been monitoring their blood sugar until they find out that they have diabetes. And then at that point, it's almost too late. You're fighting an uphill battle. With the Apple Watch, where you can passively monitor your blood sugar level while you're still a healthy person, and then that information gets passed to your doctor via the Apple Health Kit, the doctor can detect that you're on your path to getting diabetes before you actually have it, and while you still have an opportunity to do something about it before you get sick. And that's huge because nobody wants diabetes. It's not something that you want. And
Yeah,
so
but
what this
true.
does,
Okay, so if I may speak, that's true. But the Apple stuff, it's hasn't. I'm not Apple shareholder. It hasn't been proven yet. They haven't been able to do it. It was kind of a rumor yesterday that they're working on it. It's one of their
that's correct. That's
dream
correct.
projects. But
No,
that's not
that's
that it was
to
3 years
but,
out.
but what you're talking about is to diagnose and to catch it beforehand. They're talking about prickless glucose checks, which is not to necessarily prevent it from happening. So I think that's a little
well,
bit different.
that's an app away, right? But that's what this is all going to is that like healthcare. No, the best medicine in the world is the medicine that you don't have to take, right? You don't want to get sick. And this is one of those products that will help people that will prevent people or delay the onset of an illness. And you're absolutely right. They said that and what I said before is that they made significant progress on it. And I did say that I didn't know yet if they have FDA approval on all this stuff because it's a medical device. So they're going to have to go through the approval process or get fast tracked or something. And I said I was still researching this. I haven't actually bought any leaps or anything like that yet. But it fits into my thesis of preventive healthcare and technology. And that's why I mention it because it's interesting to me, and I'll do more research on it and report back when I find more details.
Yeah,
I would like to stand corrected. Sorry, Copper, just real quick.
Yep.
So type 1 diabetes is genetic, and you can actually be born with it. So I do retract my statement earlier. But yeah, go ahead, Copper.
Yeah, it is absolutely genetic. I have a friend that has it, but I mean, I think it's cool technology, but you're also relying on people giving, caring, to put it nicely. Like, I saw a guy the other night that had a glucose monitor on his arm, killing a plate of cheese fries. Like, I mean, I think most of these people know they're on the path to sickness. Like, you just gradually feel worse. I myself probably am doing it to myself. And I just keep doing it because I'm American.
And as I see, Apple Watch wearers usually are the ones that are trying to close their fitness goals and doing that stuff. Not everyone, but a lot of them, they're already active. And, God forbid they have the type 1, but you're right. You have a lot of type 2s going to be wearing Apple Watch.
Okay, so I guess how do we trade this? Is your thesis that this is bearish for companies like DXM that provides diabetes monitors and Sensonics, ticker SENS, which also provides diabetes monitors? Are you saying that like Apple is coming out with this and these companies are just going to be? I mean, DXM is like that's their whole business. is doing these kind of like implantable monitors. I mean, this could destroy their entire market cap.
Yeah, it went at lowest 4% yesterday, but it ended only 2%. So.
Right.
could.
So what's the trade? That's what I'm asking. Like, I get we're talking about diabetes for the last 10 minutes, but like, what's the play here?
Yeah,
My
it's called
play is a longer
just
term play on
human genome.
Sorry,
I was just gonna say real quick.
Go ahead.
Real quick.
Put some sugar.
If we can just like not step over each other, obviously I do it sometimes, but just for this conversation, I noticed you guys are stepping over each other. So let's just let someone talk, get their point across, and then let someone respond. But yeah, Iskald said, human genome. What's the play here? Genuinely.
Well, it depends on how you want to play it. My thesis on this is that healthcare in the United States is way overpriced, and it's missing a significant component that I think companies or technology companies and entrepreneurs are going to seize the opportunity to make some money on. So there's going to be winners and there's going to be losers, because healthcare needs to be disrupted the way that other industries have been disrupted by computer technology and AI. And healthcare is primed for that, because there's a lot of money in healthcare. And if you can figure out some of these things like what Apple's doing, you're talking about making billions of dollars from the data as well as the devices. So there are going to be the people that are going to be the incumbents that don't see the future in healthcare. They're going to be losers, like the Sensonics and the other ones that are making the prick glucose monitors. Yes, they're going to be losers, but there's also going to be winners, like the Amazons and the Apples that are trying to transform healthcare the way that other industries have been transformed by technology. So that's the thesis. And then where you want to play on that, that's up to you. But my focus is on the companies that are innovators in the area of healthcare, not so much the companies that are going to be the losers. I mean, I want to focus on the winners.
So my question for you is, if Apple does get it where this is FDA approved and you don't have to worry about the pricks from the Apple Watch or anything, do you think that you would also see an increase in like their iPhone sales in that? Because obviously if you get the smartwatch, you're probably going to want the phone to go with it. Do you think you'll see some people swap over for that?
Well, there's that, and there's the whole data side of it, because so Apple has, on the back end, Apple has something called Apple Research Kit and Apple Health Kit, which are both health research related or healthcare management related. The healthcare data that your Apple Watch gathers, if you set it up, you can transfer that data directly to your doctor's office, so that next time you go to your doctor's visit, they can look at your healthcare data and say, hey, your blood sugar is kind of getting up there. Here's some things that you want to do. So it's a lot more than this one device. Like Apple has an entire ecosystem of healthcare related hardware and software that is fitting into this, and this is just the beginning. I'm not surprised they're doing glucose monitors, because like I said, diabetes, kidney failure, and high blood pressure are the top 3 comorbidities in the United States with regard to healthcare.
So the play is bullish on Apple. That's the play. Bullish on Apple because they're somehow going to start sidestepping FDA regulations, which have been in place and have kept them from doing it.
No.
Well, no, that's the deal. The reason why companies like Facebook, like Meta and Apple haven't come out with this technology has been around for years. The reason why is because the FDA views them as diagnostic devices, and they are highly restrictive. And so that is one of the reasons that we haven't seen this technology. This technology could have been published in 2014. One of the reasons we haven't seen it is because of bureaucratic regulation. I mean, it sounds like they've got a path open to them.
Nobody's trying to bypass
That's not actually the technology is different. So this technology is using basically
I've commercialized medical devices before. I'm telling you that there is a path for diagnostic devices. There is a path for non-diagnostic devices. That path has only been open since 2019 and was accelerated by COVID. And it's through that new path that Apple is able to get this commercialized. It didn't exist until 2019, because before that, it had to be a diagnostic medical device, which is a completely different ballpark.
What about the EKG reading on the Apple Watch?
Yes.
Yes. Those were for non-medical purposes only. It's a whole thing. If we really want to get into it, it is a whole ass thing.
Could this glucose thing be similar?
Yeah,
Yes.
so there's now a path for non-diagnostic monitoring. They eventually created a path because, I mean, the Apple Watch has been checking your pulse for like a decade, right? So, I mean, they eventually created a path for this non-diagnostic health monitoring, but it's a fairly new path. It didn't exist before. And so it's a new category of device where basically it gathers medical data, but it's not considered medical data, and it's not real medical data because it's not technically a diagnostic device.
Yeah, so
if you get what I'm
because
saying.
I would
so
take
so there's two parts of, hold on a second, there's two parts of healthcare.
No.
So there's the part of healthcare where you're sick and you have medicine, and then there's a part of healthcare where you're gathering data to manage your health before you get sick. And this device fits well into that area that manages your health before you get sick, before you get these medical devices, and before like all this FDA regulatory stuff kicks in. And they're not really trying to sidestep FDA regulations. I'm pretty sure they're going to do whatever it takes to get all the blessings of all the regulatory agencies like they've done with all the other products before. But like I said, the future, this has to happen in the United States because the expense of healthcare in the United States is just killing companies. Right.
I actually have a different side of this, if you don't mind. I just looked it up and I typed in sugar, and the ticker is cane. It trades 3 different sugar futures. Maybe we just invest in sugar.
I just want to say real
I
quick.
like it.
It's called. Is it a little speculative to jump on the bandwagon here and be all high, like cheerleader based on this? No offense. They can't monopolize this, right? It's medicine. Go ahead.
Yeah. I just want to say the biggest thing here is that you have to understand that this medical data that comes from non-diagnostic devices is looked at by a doctor. Like if you go into the doctor's office and you're like, my toe hurts, and they're like, okay, well, let's try to figure out why your toe hurts. It's the same kind of thing. Like a level of data that comes off your Apple Watch, you might think that it's like great medical data, but if it's not gone through a diagnostic device, there can be all kinds of glitches. There was just a glitch on Reddit literally today, like literally yesterday. It was on the top of our popular, where this person's Apple Watch glitched and he thought his wife was having a heart attack because it glitched and showed that her pulse was at like 197 or something like that. It was like on damn, that's interesting, or one of the subreddits. So like as long as it's not a diagnostic device, you have to take all the data that comes out of this with a grain of salt, because there's no clinical controls on the data that's gathered or sent back to medical providers. Now, while it could be valuable as a preventative tool, that's just what I'm saying about it. Like you got to keep that in mind. It's not going to necessarily replace a diagnostic tool.
And they admit that. They admit that it will not be as accurate as an actual blood test, right? And they also say that the current size of that sensor, it's still about the size of a phone today. So they have at least 2 to 3 years before they'll get it down to the size of an Apple Watch to use it and get it approved. So this is like way far out before you actually.
And that's exactly what I said when I first started the conversation.
Yeah, I'm
say
looking
it's
at
long.
Take them 2 to 3 years to get it down to the size of an Apple Watch, and it'll take them another 2 to 3 years to get FDA approval after that.
That's right.
Yeah, and let's not forget, you're dealing with a fine line here. Diabetes is not like the easiest thing to break into. It's very well enforced in regards to regulations, as well as what they're allowed and not allowed to put out in the market. Let's not forget
I'm sure all the people that work for Apple, they don't hire dummies. I'm sure they're well aware of all these things.
No, and
like I said when I started this, is that this is a long-term thing. They just announced it yesterday. They made progress on something that fits into my thesis. This is not like, there's a larger thesis here. So it's not like I'm going to jump in and buy all the Apple shares that I can. I did say this is a long-term thing that I need to do more research on it before I make a decision. So yeah.
Oh, well, you sold me at the end of the day. I thought you were cheerleading for it, to be quite frank.
I can't help how you interpret things.
Well,
you interpret things the way you want to.
pullback.
What do we think about jobless claims coming in at 192 with 200,000 expected, and GDP coming in at 2.7 when 2.9 was expected? This shows cooling gross domestic product numbers and a stronger labor market. I mean, I'm thinking a pretty gnarly Fed hike might be on the table. What do we all think?
The futures are up, so that figures, I guess.
No, I agree. I think they may do a half point next month. Not today, but I kind of agree with the last wholesale number too. And now that's the 6th week in a row that it's under 200,000 in new jobless claims. So they got to stamp down this hot market, right? Or the employment market, I should say.
Are people just looking like 12 months ahead? And then saying like, yeah, all this stuff sucks right now, but maybe in 9, 10, 11, 12 months, it'll be different. Because like, other than that and zero DTE options, I can't figure out what is supporting the market right now.
Well, the
They
Fed
just need to do a full basis point hike. That would shock everyone.
So the Fed interest rate hikes lag the market by 12 to 18 months. So like basically what ends up happening is like they're ratcheting up the interest rates and they're looking for signs that it cools off this inflation and stuff like that. And as soon as that starts, right, they know that they've probably overshot because they continued raising interest rates after that. And you don't really see the full effect of a Fed interest rate hike until almost a year later. And so like that's why people are looking out so far, is because it takes a long time for those interest rate hikes to actually end up affecting the economic system.
While we're on this topic, when we have you on, Scald, what do you think about them? I'll call it this, kind of pausing the tapering. They've only really let half a trillion fall off. What do you think that's going to do for the rest of the year? Because they're supposed to do that too. They've got to lessen the balance sheet, which is their other tool.
Yeah, I mean, it's interesting to see that they paused the tapering. I mean, in a way, a high inflationary environment sort of decreases the effect of the debt, if you get what I'm saying, right? Because like if you have high inflation and you had debt, but now you have high inflation, it decreases the effect of the past debt because, right, it diminishes the dollar's strength. But anyway, I don't know. They have to keep tapering.
Yeah,
they just have to do it.
We've never done something this big, so no one knows.
Yeah, right. But I mean, I think they have to. I think they're between a rock and a hard place. If they don't continue tapering, then what's the point of any of their other activities, right?
But Scald, wouldn't you say at the end of the day, the war is a little bit a reason why to like kind of pivot and pause and kind of just make sure we're not jumping the gun on tools?
What? Sorry, what was that again?
So do you think that at the end of the day, they'll pause the tapering and just pause the rate hike speak just due to the fact that we might be headed into some wartime wars?
Well, I think that the most negative thing that could happen in the market is China openly supporting Russia, and that would be a broad negative impact on the market. If that doesn't happen, which there's probably no good reason for China to do that, if that doesn't happen, then I think that the Fed will just continue with its current policy. But if that does happen, I think there'll be a period of economic turmoil globally as markets have to adjust to what might be a world war, right? If that kind of thing happens.
So what you're saying is puts on Tesla. Got it.
Everything
and puts on Lucid also. Sorry, Mass Gamer, I know that's one of your favorite, but if you just look at their delivery numbers, it continues to go farther and farther down. They've got 3 months of cash on hand. So they have declining sales. They're burning through their cash on hand. Things are looking pretty grim for Lucid. I'm not going to lie.
Well, I mean, they have some great technology considering the EV racing and stuff that they do, but their problem was they started with a sedan. Nobody wants a sedan.
Yeah, I mean, just look at what Ford did. They killed off their entire sedan line. They now just make SUVs and trucks, right? I mean, because sedans, it seems to be that the sedan market, it almost seems like domestic manufacturers have just surrendered those to the Japanese and are like, you know what? That's going to be Honda and that's going to be Nissan, and they're going to make sedans, right? And we're going to make trucks and we're going to make SUVs, right?
Well,
that seems to be what's happening, at least here domestically.
They have the Charger. The Charger is a very popular car, but that's pretty much the only domestic.
That's not your typical sedan, though. That thing is a monster.
Not if it has a V6.
Oh, and that's just a castrated monster.
So I'm buying a car in the next couple weeks, and my wife wants a Jeep.
Yeah, the new Jeep Grand Wagoneers and Grand Cherokee L's are extremely nice.
I'm sorry, but the Jeep Wranglers with the cab configuration look ugly as sin.
It seems like a ton of folks, instead of getting either SUV or sedan, they're kind of leaning more towards like a mid-size SUVs.
Are we seeing people? Because obviously, if the sedan market's basically the way it is, it's really not going to be a lot of changing. But with the gas price issue being a problem again, do you think we're going to see people going from these larger SUVs and downsizing there? Do you think there's any place to be made off of that?
But that was kind of my point, was that the mid-size SUVs is probably the best efficiency, right, for like what you get, right, size-wise, and you get the fuel efficiency. But you're not in a sedan, right, and you're also not an SUV with a V8.
It just depends on how much money you have and how many kids you have. Like the I don't like them, but the Tahoe Suburbans, people love them. They buy them like there's no tomorrow. Grand Cherokees, Durangos, same thing. Sequoias. They've gotten to the point where pretty big vehicles get pretty decent gas mileage. I mean, you can have a large SUV that still gets like 17 to 20, depending on the situation.
Yeah, I was going to say fuel efficiency on SUVs have really increased. And, you know, one of those things is they'll go down in number of cylinders once you hit a cruising speed. So basically, it's almost like a four-banger engine once you get up to highway speed, right? You're just firing on like four of the 6 cylinders. And so then your gas usage is just pretty low, you know?
Well, I mean, he said like 17, 18 miles a gallon, and I'm looking at my average fuel mileage, and that's 36.6. So that scares the crap out of me.
I get 28 in my Jeep, man. And it's a Jeep. It's not like made to be fuel efficient.
Yeah, that's pretty impressive for a Jeep, not going to lie.
Yeah.
If I get to buy a car in the near future, I'm looking at a Volkswagen Golf, and I think those are about 32, 33 highway.
You know what's crazy about that, though, is that cars really haven't improved the gas mileage since like the 80s. There was cars in the 80s that got that 40, 50 miles per gallon because like we added so much weight at the same time that we added efficiency. But on a complete sidetrack note, what dating sites are publicly traded? Like I'm talking romance, finding, stuff like that. What is publicly traded in that sector?
Grindr.
Match.com and Grindr. Match.com and Grindr.
All right. So
Tinder's on there too, right?
Puts on Tesla, calls on Grindr. That's
mostly Grindr.
Hey, I gotta play.
Lucy. Say it, lay it.
And I got some DD. I put the link in the comments. I mentioned it before, but I typed out the DD for everyone's pleasure. It's for Warner Bros. Discovery, and it's about that Harry Potter game and how it's gonna make them billions. Literally billions. Yeah, and you can too. So I posted my play. It's in my DD. The link is in the comments. So please, I'm glad to take any questions. But what I'm doing is I'm I'm holding shares. I'm selling puts. I'm buying calls for expiring June. I'm thinking about leaps, and I'm going degenerate, and I'm buying weeklies, the calls that expire tomorrow. So
Based on your advice, I went straight degen and bought a bunch of weeklies yesterday.
Excellent.
Hey, somebody was asking about dip plays. Planeteer is down 12% this week. I'm buying a few and scaling in.
Hey Lou, since you're very bullish on Harry Potter, are you also gonna be bullish on any future games that come out from the same developers
Same developers
or publishers?
No, I only care about the fact that Harry Potter is literally going to make Warner Bros. Like $2 billion this year, which is a ton of money, by the way, for a video game.
You played it?
Nah, but I know people that played it, and I care about data. I care about numbers. I don't care. The video game could suck, and people would still buy it. So I hear it's good, but the sales estimates are already breaking a lot of records for video game sales upon launch. So I did the math. I looked at estimates, and yeah, I think it's safe to say they're going to make about $2 billion within the first year of release.
I know that a lot of people I've been around, like I've heard side conversations about it. They're all loving it. I have a friend that she's a streamer and she's been doing a lot of it. So, people are going nuts for this thing. They're like, good, I can forget about being an adult again.
Did you get your little cosplay, a little wand, a little robe?
I got a wand for
scar?
you.
Did Twitter try to cancel you guys yet?
Dude, my wife was like, you can't buy that Harry Potter game because it doesn't support trans rights. So I not only bought the Harry Potter game, I bought the controller that has Hogwarts on it that is custom. And I was just like, you know what? Now I'm buying it even harder because he told me I couldn't do it.
Wrong. You can play as a trans character in the video game.
Oh, she's saying because J.K. Rowling doesn't support trans women.
Yeah, J.K. Rowling doesn't like trans people. But fuck J.K. Rowling. This is about the video game, which, by the way,
is about money.
Pro-trans and is going to make Warner Bros. At least $2 billion in sales. That's a big increase in sales, and then free cash flow is going to go up by something like 25%, which is massive.
Well, in that first week, the game broke Twitch records for streaming immediately. So, yeah, I don't think people care about the quote-unquote anti-trans stigma around it.
Nah, it's good. It's good. It's pro-trans. They got a trans character. You can be trans. Everybody be trans.
Everybody buy it. Everybody buy it.
Such a small percentage of the population, anyways.
Let's go.
We need those 2 billion of sales. Everybody buy
Hey,
it.
can
right
everyone throw up the Doge for Lucius? Sorry for stepping over you, my PP reversed. I just want to say, throw up the Doge for that DD. I just read it. I was like, wow. I'm totally on board here. I don't even like Harry Potter. No offense to you Harry Potter lovers out there. They make some great movies for some sit down and waste some hours. But market just opened. That's some great DD. Check it out. I do recommend it.
Yeah, I'm not even the biggest. I've seen the Harry Potter movies, never read the books. I do like how smooth Harry Potter's wand is.
You like those spells coming out of the wand?
Wait, what is the standard regulation wand dimensions?
Looks like a
dude, you can buy this wand that from Warner Brothers. It links to your smart home. And so now I can run around flicking it and yelling Lumos and turning the lights on in my house. The funniest thing.
So wait,
Look up.
How much?
What size batteries does the wand take?
It wirelessly charges. You can look it up. There's a trailer for this wand. It's a smart wand that's created by the Harry Potter. It's like $180.
You know that's already in Android. If you say Lumos, it's gonna turn on your flashlight.
Can I do trading with the wand, flipping it at my laptop, making trades? Can you do that?
All right, guys, it's 9:30. Time to check on your losing positions.
You can hold your wand in your pants. You keep it in your pants, and you can bring it out anytime you like and show people.
Anytime I like.
If you haven't, you could check out Wizarding World online. That'll give you, or sorry, it's Wizarding World. That'll give you pretty much like a whole bunch of information about like Harry Potter, and that actually integrates into the game that Loose Ventures has been talking about. It's one of the first things when you start it up.
Yeah, if you have the wand and the game, then you can use the wand in the game. I linked the Magic Caster wand down below if anybody's interested.
I suppose I just now thought about it, but some of you might be commuting and you might not be able to read it, so I'll give a quick summary. It sounds like most people know what Harry Potter is. You know about the game, but the video game it's being rolled out in separate consoles at different dates. So the sales are already breaking records, and it'll come out I think on like PS4, Xbox One, whatever the older consoles are, and Nintendo Switch later dates. So it's breaking records for the sales so far, for historic video game sales upon launch, that is. And yeah, I think within the first 2 weeks, it's estimated to generate about $1.3 billion of revenue. Warner Bros. is estimated to make about $44.2 billion for the entire fiscal year 2023. So that $1.3 billion, let's say it goes up to about $2 billion, which I think is very realistic based on the momentum that it has so far. Warner Bros. Could actually have some kind of meaningful growth in sales for the year. So that would be a pretty big deal. It doesn't sound like a lot, but 1 to 2% added to the 2% expected so far. That's a pretty big deal. So assuming the success of this video game continues, Warner Bros. Could do a whole lot of other things based on not just the video game, but the Harry Potter franchise in general. And I suspect that they're going to want to take the Disney route, and they're going to say, okay, we're making a ton of money. Let's do DLC for the video game. For those who don't know, DLC is just extra content that is very high margin, and people eat that shit up, especially the fanboys, fangirls. So they could do DLC. There's rumors that they're going to have a new movie. I expect to hear, maybe we'll hear something about that in the earnings call today after hours. Maybe not. I think it's still early. It's just a rumor so far. It sounds like. So yeah, I think they'll really lean into it. They want to leverage the Harry Potter franchise even more, and possibly fuck it up the way Disney did. But that's a lot of money to be made, right? So free cash flow is expected to go up I think it's about 20%, close to 20%. That's a pretty damn big deal. Margins on video games for blockbuster video games, they approach about 50%. And that can be higher, especially when you have DLC coming out for the video game as well. So big increase in free cash flow. That's really big for Warner Bros. Because they have a lot of debt. So this will help them deleverage. That'll be welcomed by investors for sure. So yeah. TLDR, Hogwarts Legacy would generate at least $2 billion in sales within the first year. Warner Bros. Likely increase revenue and earnings guidance for the year based on strong sales so far. They'll probably mention that on tonight's earnings call. Management want to further leverage the Harry Potter franchise, given the massive success of the video game with the potential for DLC, another Harry Potter movie, or even a TV series, just like what Disney did with all of its content. And the markets are not yet pricing in the sizable revenue and free cash flow increase Hogwarts Legacy will contribute, as Warner Bros. Discovery is currently trading at a discounted 0.75 times price to book value. So I'm holding shares. I have weekly calls, strike 17, expiring tomorrow. I'm selling March puts, strike 14, because theta gang. And I'm also buying June strike 20 calls. And if you're a boomer, you could even go out for January strike 20 calls. You go for the leaps.
Too long, didn't read. Big wand for Potter.
How much is the percentage of your portfolio on this, Luz? It sounds like it's a lot.
Nah, it's not that big. Well,
okay.
I wouldn't tell the percentage because I don't want people to start guessing how much money I have.
Well, you don't have a lot of exposure, is what you're saying, in case it goes wrong.
I mean, I got 11K in shares. Does that do anything for you?
I want to know if it's a lot of exposure or no, not a lot of exposure. 'Cause you
I
sound
mean,
like
that's
you're
a
all
good
in.
amount of shares for a janitor at Citadel.
Yeah, I got 11K
Yeah.
in shares, and I have about 3,000 in calls. So I mean,
Gotcha.
It's like half a year's salary.
The
It's a lot of
calls,
buckets.
janitor. Hey, janitor life is tough.
the calls I was most interested in. I just wanted to match
Yeah.
whatever you do.
Did you say the price to book is 0.75?
Yes, sir. It's up 1.5% already. So price to book's probably
What
like
the fuck?
0.7677 now. Yeah. So it's been really low, and it got very low at the start of the year, the end of last year, and so I guess we could talk a little bit about Warner Bros. So I think Harry Potter has to kind of carry the company in a way. They have some other content that they're leaning on. The Game of Thrones franchise, The Last of Us is doing well, but the company has kind of struggled in the past, and management hasn't done the best job of leveraging their content. They keep canceling a lot of shows and movies, stuff like that. Not a lot, but a few, and a few is a lot, really. And they have a lot of debt, so that's another big issue. So at one point, when they merged Warner Bros. And Discovery, that is, you could have seen them as this kind of big bond, and you would say, okay, I want to know that the yield is high on this bond. The yield would be free cash flow yield. Well, that was only, I think that was under 5%. At one point, it was like 1 or 2%, something the company, it wasn't expected to generate positive free cash flow for a little while based on estimates. So at that point, it wasn't looking like a good buy. So that's why the stock price kept trending downward. But now that the free cash flow is suddenly the estimates are being revised up, it's starting to look like a good buy. And that price to book value is looking pretty nice.
Have they ever paid a dividend?
To make debt disappear.
What the fuck?
Of course.
Is that
So-
the new enemy of the Harry Potter?
I think I heard before there was an ask about a dividend. So technically, they were part of a dividend company before they broke apart and separated.
You know, you kind of sound like a mudblood or a muggle.
It's pretty racist, isn't it?
You don't get to use that word.
Did somebody cast a spell on Latter Day?
Hey, Luce, I just had a question. Why would you do the calls for June instead of waiting until it released on the Switch as well?
Honestly, I don't know how. I don't want to try to predict like another big boost in sales based on the Switch release date. What I'm trying to get ahead. So markets are always pricing in stuff that's going to happen, right? So rather than like time the sales data on the Switch, I'm trying to get ahead of that and base my play off of what I think management will update investors relating to guidance. So I'm kind of trying to ride the wave here. And maybe by the time the Switch data comes out, maybe that'll be a good time to start kind of dollar cost averaging out, something like that.
Hey, Luz, I think yesterday you mentioned right now the sales for Harry Potter are 30% of Warner Bros., right? So when they get to 2 billion in sales,
No, 30%. Wait.
Oh, I thought you said 30% yesterday. What's the percentage right now that Harry Potter is generating for Warner Bros.
Like percentage of revenue?
Or sales?
Yes, that's revenue. It's pretty small. So what I was saying earlier is this is going to lead to increased guidance. Warner Bros. Is not expected to really grow this year, but if that can turn into Warner Bros. Is going to have 3, 4, maybe 5% growth in sales this year, that's a pretty big deal. Like increased guidance is usually favored by investors. So that's a pretty big deal for a company that looks kind of stagnant. And the free cash flow is what I'm more interested in, because that's what you're supposed to get as shareholders, cash flow. So the free cash flow should increase anywhere from 18 to 25% for the year. That's a massive increase, just based on Harry Potter.
Well, like what I'm kind of banking on with this is that it's more of a surprise to the market than other things that are beats, right? Like I just feel like the market's not as in tune with video games maybe as they are in other markets, hopefully.
So yeah, so the thing that kind of makes me a little bit excited about this play is it's an actual, like, okay, there's a potential catalyst, but it's kind of visible, but the sales, the units sold on the video game, they haven't been announced. They just have like, all I can find is units sold based on previous launch dates, release dates for other video games. So an example, they're saying it's outpaced Elden Ring by something like 65%, digital and physical, blended. So I can base it off of that. I don't think the markets have that data yet. I haven't seen any analyst reports saying this is what we expect Harry Potter to make. And if you're looking at it from a percentage of revenue, it's not that big of a deal, like $1 to $2 billion versus 44.2. I mean, that is a lot of money, but it's not anything groundbreaking. Like, you just had Nvidia say AI 800 times in their earnings call, and investors loved it, even if it won't even make that much money. But here you have a video game that's going to make a shit ton of revenue, but the markets haven't really, I don't think they've had a time to calculate what that change will be. So hopefully on the earnings report tonight, CEO will say something about it and say, hey, by the way, like, we're looking to generate about this much from the Harry Potter video game. Sales are looking strong. That's what I would do if I were him. I would be like Nvidia saying AI. I would say Harry Potter 1,000 times and say, we're going to leverage this just like Disney does, with Marvel and Star Wars. And never mind that they kind of ruined those franchises. It's all about money.
Their CEO also has emphasized multiple times that they're trying to focus on their core IP. This includes Harry Potter.
I will say, for their content revenue segment, this will contribute about 18% of that segment. 15 to 18%. I would say like 15 to 20% on the high end, which is a really big deal because they have plenty of content. So for one franchise to contribute 15 to 20% within a year, that's pretty massive.
When it dipped, when the price dipped down below $10, was there a lot of buying from the market at that price? Did other investors find it attractive?
It's been about, I want to say, a month below $10, and then coming off of last year. I mean, the whole communications sector went on a tear, and Warner Bros. Went up with it. So it even went below $9, and now it's trading at $15.70. What is that? 2 months later, 3 months later. So that's a pretty massive increase. That's a lot of buying.
Thank you. I had read a little bit about this company before. It's a John Malone company, and he said one of the advantages of Discovery in particular is that its penetration around the world is quite strong, in the sense that there's a Discovery channel in every country, and they have a avenue to advertise their products basically through that pipeline at low cost.
All I heard was penetration is strong.
So how are the portfolios looking today, guys? I did get out of one trade.
Looking real good. Thanks to Nvidia.
One of my favorites, Iron Mountain, reported this morning. They did well. It's up 5 2/3 right now. Pretty good, 5% wise. So they did well. Keep storing those documents.
Wow, wow, wow. Nvidia. Anybody who had calls on that yesterday, good for you.
I mean, lots of the things that I've been selling covered calls on are up, so my portfolio is pretty happy.
My Google portion is not happy, but I'm not getting rid of it.
Speaking of Google, didn't they just said to some employees to share desks? They made some type of announcement that some employees should share desks. However,
I'll have to share a desk. Oh, the humanity.
I haven't heard it with them specifically, but I know a lot of corporations are doing that with trying to get people to come back in the hybrid environment, even trying to still save on real estate. So you'll be there 2 days, your other cohorts will be there, the other 3 sharing desks.
Yeah, they call it hoteling. It's pretty common. There's probably some plays to be made around office space management with like check-in software and such.
I remember when Meta made a couple announcements a couple months ago, like they cut out laundry services and lunches and all this other stuff.
Could this be one of the reasons with the rise of hoteling that Clorox has been doing pretty good?
Oh yeah, I mean the usage of cleaning would go way up with that strategy.
We'll talk about Clorox again.
Ecolabs as well. Ecolab, ECL. They're also a good manufacturer of commercial industrial chemicals, and I see them actually getting featured in like end caps in Home Depot. I was surprised. So I think they're trying to extend down to residential. They're like a dividend aristocrat, really well run company.
Did you guys talk about Alibaba already?
Oh, Luce, I have an interesting story for you. One of this.
All right.
Your DMs on Discord.
All right.
he said something about Discord. But no, we didn't talk about Baba. Anybody want to add on Baba?
They reported this morning they were almost up to 100 in pre-market. It's come back down a little bit. I won't hold it anymore, but
Looks like a pretty nice EPS beat. I doubled my call position in JD yesterday, so I'm pretty happy right now.
I was just skipping over it, so I guess they announced buybacks by 2025. Their cloud division is going down, but EPS pretty much on target. Well, expectations.
and Wish reports after its earnings today. If anyone's still beating that dead horse.
What's your sentiment? Bullish or bearish?
I never played Wish, so kind of the sideways arrow I've asked for. I just, again, being a Chinese company, I won't invest in it, so I guess bearish.
I've seen a lot of people with like $1 calls. I ain't messing with that.
Yeah, I just know a lot of people have been playing it, so that's why I brought it up. Nothing really for me personally.
Wasn't Wish the company that was supposedly like selling children in cabinets shipped from China or something?
Oh, I'm definitely buying calls.
No, that was Wayfair.
Yeah, no, that was Wayfair.
I don't know what someone was trying to say about the Discord earlier, but maybe there were quite a few people that had puts either on the semis or Nvidia, so it wasn't pretty yesterday.
You know, what's so funny? At the beginning of this month, there was a spike in a particular towel company, and everybody was grabbing $12 calls and $10 calls. And now I'm looking at the graph, and it's not. I mean, yeah, it's pretty funny. It's laughable.
Ear
It drilled. Anybody here have some new information they want to share about some towels?
Fuck the towel company. Hey, did you already talk about Nvidia's earnings? Like, actually talk about it, or
we just brought it up, but we didn't really dive deep.
No, they did well. Go ahead if you have the deets in front of you.
So what I see is that they did beat sales. Did they beat earnings?
I believe they did on both. Yeah.
So yeah, so they had good growth in several segments. Their quote unquote gaming segment, which is includes like crypto, so GPU segment, that was down by like half. Which I suppose makes a lot of sense because there's a lot of demand pool through COVID. So, a lot of people had money, so they were just buying the hell out of those GPUs, but now they don't need them. They don't need to replace them. But then they said AI a bunch of times, and now the stock is flying. I think, let's see if this number is right. I'm trying to look at PE. It's trading at a forward PE of 51 times, trailing PE of 94 times.
Yeah, it got up to 95 trailing yesterday, and it was the call because it was about up 6 or 7 in aftermarket. And you're right, as soon as that call happened in the AI, and they actually did say their gaming is starting to gain a little speed again, but it was the AI rip up to 12 up.
Yeah, so it's all like AI. So here's my take. So I got into AMD, I want to say like 4 or 5 months ago, and I was kind of worried about the semiconductor space. So I made it a pairs trade, and I shorted I shorted $100 of Nvidia for every $400 of AMD I bought. So it was like a 3-to-1 long short play AMD Nvidia. Just because I was like Nvidia's valuation is still high, and I was just worried about the semiconductor market. Nvidia went on a tear, much greater than AMD. I think it like doubled the pace of AMD. But what I don't quite understand is Nvidia has had lower revenue growth than AMD, but it's priced like 4 times as rich. So I'm trying to kind of wrap my head around it. Like, I won't deny they got a good business. They captured secular trends very well. But I don't know that their profits are going to increase, like 30% year over year for the next decade, which is kind of what the stock price is pricing. And this reminds me of, in case any of you have heard the tale of Cisco through the tech bubble. This reminds me of Cisco when they were saying, we're going to grow by 50% every year, forever. And then Cisco was one of the big tech stocks that collapsed like 80% when the tech bubble bursted. So to me, Nvidia looks like the modern day Cisco. But I don't want to just like throw money at shorting it, obviously, right? Because the momentum's so strong. I'm just kind of trying to wrap my head around it. Valuations, it looks like super tech bubble time.
So I mean, after that, Cisco had a long period of basically cyclical. Basically became like a cyclical stock for quite a while. Is there a way to position yourself to profit off of the next phase of Nvidia, where it goes into being a cyclical stock?
I mean, it's tough to short. Like, you can ask any of the guys that shorted the tech stocks through the, well, I guess you can't ask them because, you know, they're like rich and they're gods and none of us will probably know them ever. But shorting these stocks based on valuation can be a massive pain in the ass. Like, if you asked anybody about Carvana back in, let's see, what was it, middle of 2021, I started shorting Carvana because I was like, this doesn't make any damn sense. The valuation was god awful, and I started shorting it around like 320, I think, and it just cruised up to 377 within like a month and a half, and I was like, this is just nuts. And then it started coming back down, but by the time it came down below my initial price, it came down to like 280. I wasn't making any money because my puts were just losing the theta, and you know, the puts were really expensive. So when you're shorting stocks just on valuation, the stock prices can just remain high. So it's really hard to time that. I think, oddly enough, the safer thing to do might be to just short the stock directly. I don't think Nvidia has a lot of short interest, and the cost to borrow is it's nearly zero. So like, if I was really like, okay, this doesn't make any sense, and this is like Cisco and the tech bubble, and it's all going to come crashing down, then I would short sell shares of Nvidia. But yeah, it's kind of hard to time that, really.
Could you do like a long dated put spread to handle for the IV with the two legs, and just say, hey, I want to bound this by, I don't know, 100 points or something like that?
Yeah. The put spreads are, I would say, they're good for capital efficiency, not necessarily for leverage. Like, you think you get leverage, but you still have to pay up to make a lot of money, right?
Correct.
Yeah. So like, really, when I find a stock like that, and I'm thinking in my head, I'm like, oh, there's a high chance this thing is gonna, you know, drop like in a big way, I definitely want leverage. But I just don't want to pay that much for it, especially when I'm not sure when it's going to happen.
Yeah, that's true. Yeah, I mean, you look at Nvidia. It's a beautiful company, but man, they have these massive price swings. You know, they'll go through periods of get chopped, you know, greater than in half, and then they'll run up 150%. So, you know, there's a lot of money to be made in those, call them cycles, but yeah, you don't know when it happens, and it's really expensive to play for sure because IV's so high most of the time.
So, Luce, let's say that it's become time and you've decided that you are going to short Nvidia. Let's say sometime in the future, not today. And you've made that decision. When you receive the capital from it, where are you going to put the capital that you receive from shorting it? Are you looking at like a semiconductor ETF that has Nvidia in it, but other semiconductors, or a different sector, or hold the cash?
I mean, depending on how much the stock price drops, it could be a good long-term play. But based on valuations and performance of the business, like, I don't have any questions about Nvidia's fundamentals, about their financials. Like, they're rock solid. It's strictly valuation, and then I am curious how they're going to maintain like good, you know, like really strong sales growth. So that would still be a question of mine, even if the stock price plummeted like 80%, right? So considering that, AMD is still looking to have better revenue growth, and they have very similar fundamentals and financials. So at that point, assuming, you know, Nvidia isn't just going to drop on its own, right, and everything else is fine, I'm assuming AMD is going to drop, you know, with it. So I might be looking at AMD. If I really like Nvidia and it's just like, I don't know, it's still very popular, and maybe I'll say this: if AI, if there's something tangible with AI, not just like chat bots, but, you know, because that's what all the hype is around Nvidia right now, is they're going to make so much money off of AI. if there's a product, like a specific product that hasn't been overhyped, like what can AI go into? What is the source of massive cash flow for Nvidia? If that can be identified and it's realistic, and that means Nvidia's sales growth will go back to, north of 20% or at least close to 20%, then okay, yeah, that sounds pretty good to me. But I don't see anything like that. Like they'll make a couple $100 million extra on AI, but that's nothing compared to the size of the company, really. So if there's something like that, then I'll be like, okay, you know what? I do like Nvidia. But until I see like a strong source of increased cash flow, like a big increase in cash flow, I'd rather go for AMD.
But now that Bitcoin is going up, isn't that a positive case for Nvidia also?
Well, Ethereum was proof of work, and that was a really strong catalyst for the company. I actually bought it back in 2020 on the strength of what crypto was doing, and it was a really good way to play that. But Ethereum's kind of proof of stake now, so actually all the miners are offloading their GPUs that they bought to mine Ethereum. So that's actually not a factor. And Bitcoin, uses proof of work, but it's using ASICs, which don't leverage the GPU as much for their workloads. So no, not really.
There's no crypto that you can mine profitably with GPU right now.
Right. Yeah, and especially with a lot of the crypto interest, verging towards Bitcoin and Ethereum, as opposed to the altcoins. I think you're going to have a hard case to, have some cyclical interest in, or some secular interest in Nvidia on the, basis of crypto. So I think it's actually, a bit of a headwind from a valuation perspective, because people trying to comp on a year or 2 years ago, they'll be factoring in a massive, massive secular demand that is not there anymore. And AI has been around for a while. I mean, it's sort of in vogue now with Chat GPT or whatever, but it's anchoring like everything we do, including Reddit and all the rest of it. So I'm not really sure where the demand driver is for Nvidia to outperform right now.
Harry Potter legacy, right?
I just bought a put spread on Nvidia, so let's see.
I'm the biggest Nvidia fanboy, so I just hold shares.
Do you add when it goes down a bunch? When it goes down like 60% or something like that in the course of like 3 months?
I only added when it fell to like 130-ish. But I've been holding it since like 2018.
Right. Okay. Is that your like cost basis or something? Why 130?
No, that's just when it fell, and I'm just like, everyone's getting scared about it. I just bought shares. There was no reason. I just thought it was pretty low, and I was comfortable at 130-ish.
So I bought some weeklies on Warner Brothers.
Very nice.
But I mean,
now we all need to write a letter to the CEO and sign it. Each of us has to sign it, and we say, talk about Harry Potter on the earnings call.
Can they maybe talk about AI and Harry Potter?
Hey, now you're thinking.
And actually, maybe they could talk about coming out with an EV while they're at it.
True.
Throw in some NFTs while you're at it.
Harry Potter broom EV.
It's an EV piloted by AI that looks like a Harry Potter broom and also monitors your glucose levels.
Yeah, throwing Apple Watch in it.
And Hermione sex doll. What? Who said that?
Wands for accessories.
I think the Hermione sex doll is actually going to be released at the Tesla Investor Day.
Keep your wand in your pants. Come on.
My fiance's magic wand doesn't perform magic. It just makes a lot of noise.
Also, in my opinion, Ron's sister way hotter than Hermione.
Wait, really? That peasant?
That's a good thing. It's your opinion, though.
It's okay to be wrong. What's Hermione? What's she looking like these days? How old is she? What's going on there?
Oh, she nice.
She's like 30 now, isn't she?
Ron's sister's a redhead. They're spicy.
Can confirm. Is Nvidia going to slow down at all? I did sell some strangles through earnings, the old Tasty trade way.
45 days out.
No, I went for March. And at first I was looking at strike 190, strike 225. And I'm very glad I changed that to strike 180, strike 235. But still, it's like going through. I mean, I'm good on.
Wait, what's the delta?
Delta right now is
No, when you sold it.
Oh, when I sold it, it was about I think it's about 18 each side.
Okay.
I was like, there's no way it pops 14%.
Based solely on the fact that I did not buy calls, it is going to run all day long.
Buy calls right now.
Yeah. Another company that's semiconductors that's been on fire is Allegro Microsystems, ALGM. They've just been killing it.
Never heard of them. Oh, how about, wait, did you all talk about Intel?
Yeah, we did.
The gaming division side, yeah. Just briefly, that wasn't a long convo.
Not about why they should still be going down right now, but because Nvidia did so good, it's getting some sympathy.
Oh, yeah, just a little bit. It's up 0.9%. Meanwhile, AMD's up 3.7. Those are pulling back, so maybe Nvidia will too. Yeah, Intel, I kind of wish they cut the entire dividend. They really need the free cash flow.
They should have did that years ago.
Yeah. I think it's just management. And I was talking to a fellow janitor, this past weekend. And it was funny because I was like, they need to cut the dividend. That'd be nice to cut the dividend. Then, like 2 days later, they said, okay, Luce, we'll cut the dividend. But they've been in this position for a while. And a lot of the old school value investors, the ones that were like, Intel is always the best value play because semiconductors is the company, and this and this and that. The company changed a few years ago, and it really isn't the same company. So now they're trying to get back to growth. They lost market share. It's costing them a lot of money. Their margins tanked, and the dividend's gone. So now that is, I think no value investor, nobody can look at Intel stock and say, well, no, it's fine because it's like, look, it happened. Like what the markets have been expecting is finally like being realized. I think it's close to a bottom now. There's still going to be they're going to have negative free cash flow for this year, even with the dividend cut. They're still going to be negative, like something like $2 billion. But for next year, they should be positive for free cash flow. Next, full fiscal year 2024. So I was telling my buddy, it's like I don't see why the stock price really moves up a lot this year. Maybe it could in sympathy with the markets, but you're still kind of making a bet on management. and because this is not the same management, it's not even the same company. So management has to turn this company around. Once they start proving that they're turning the company around, then you could say with a lot more confidence, like, all right, Intel's a good buy here. But that's I don't think it's going to happen for at least another half a year, maybe through the end of this year.
Yeah, what's a reason to be patient if you're getting 5% from CDs and 4.5 from
Exactly.
market accounts? I mean, I'm with you. I mean, I think it's probably a little too big and ubiquitous to die. And there's some engineering talent there for sure, and onshoring of semiconductor manufacturing and all that stuff makes sense with the supply chain resiliency and everything. Jesus Christ, like that's a painful position to be in for the next however the hell long it takes.
Oh yeah, and I did a little number crunching, and the dividend, what's it, like 50 cents a year now? It is about it's just below the amount of free cash flow they're expecting to generate next year. So to me, it kind of looks like the 66% cut was intentful. Like, it was very, I mean, usually it's going to be very specific, right? But I would have rather seen, like, okay, you're expecting I don't know, you're expecting $5 billion in free cash flow for next year. Cut the dividend so that the total payout is under $2.5 billion, right? So, like, just keep it nice and safe. Like, keep it below 50% payout ratio of free cash flow. It's above 80%. So, to me, I'm like, you should have just cut the whole dividend or cut it more, like, because now they run the risk if they don't meet those expectations and free cash flow doesn't cover the whole dividend, they might have to cut it again or take on more debt. So I think it's they're being a bit risky with that cut.
I would agree. To put it in a metaphor, it's like when Execute Order 66 happened in Star Wars. They didn't get rid of all the Jedi.
It wasn't Execute Order 100.
Exactly.
Hey, I was just going to hop in regards to that Warner Brothers Discovery play. I've been following them. They would have to mention Hogwarts Legacy. I think to really boost that guidance, because I'm assuming their numbers are going to be pretty bad in regards to revenue and like earnings per share. Kind of looking at what the estimates are for the year for like 43 billion for 2023. I mean, they would have to double their revenue in this last quarter, and I feel like that would be a challenge for them, just with the headwinds everybody's been facing in regards to advertising, and unless they like really blow up their subscriber numbers in Q4 for HBO Max.
Yeah, so the markets are expecting bad results for last year. I think they're expecting. Let me double check with the sales figure. I think it's like a pro forma like 12% decrease sales, which is pretty damn big. So the numbers, like, just objectively, the numbers aren't going to look good for last year. However, the markets are already expecting that. So if they're somewhere around those numbers, then I'm okay with it. But the play is mostly about how much contribution Harry Potter can bring to Warner Bros. So I think if they're bringing like an extra $500 billion in revenue over what's already expected for this year or what's already priced in, it's a pretty big deal, and that can offset like any like any downside risk, anything else that the management is might be screwing up, or any other downward guidance that they might impose this year. But so yeah, we'll see.
I agree. I think further down the road, I think it'd be good with this gaming, because it seems like it is Warner Brothers owns their gaming and it's their studio. So I mean, it's like they're getting a majority of the revenue or profits from that game. I think it's just I feel like the management's been kind of shitty, just in how they handle stuff, and it seems like they're kind of wishy-washy on in regards to streaming and still putting movies through theaters. So I don't know if it was more of like a cash flow problem. I know they had the merger costs have been a lot more than expected, based on like some of the quarterly reports. But yeah, I think management's the issue, and I don't know how the market with the streaming stuff. They seem to be more focused on the subscribers. So I don't know if the gaming would be fairly new to Warner Brothers, and if they can really reflect that in the guidance and sell it as positive news.
Man, I love that there southern accent you got there, bud. I tell you what, this thing here is going to turn into a barn fire profit.
Yeah, no, I agree. Like, I think management kind of sucks, you know. So yeah, this is definitely like a guidance play. I'm hoping Harry Potter can carry them. I do know that they're making some changes with their other content, DC Universe. DC Universe needs to be it needs to be improved like seriously. I know they're bringing James Gunn into it to make the next movies or whatever. But I'm not even banking that much on that. To me, it's like those analysts already price in the sales and earnings estimates for all that content. So I'm like, okay, just don't really screw that up, and it should be an improvement from what came out before. I mean, the DC movies have been god awful. The last Batman, I think that was pretty good. But aside from that, I think the movies just really fucking sucked. So I I think the bar set pretty low, and that might be why the stock is trading at like a 0.75 price to book value. So all considered, I think yes, I agree. Like management, it sucks. I I think the bar is so damn low that it should be fairly easy to improve from here on out.
I can
I'm
agree with
hoping.
that.
We'll see.
Yeah,
Yeah.
I think they're just I think they had those Fantastic Beasts, which were the Harry Potter movies, and I think they've done poorly. So I think they've kind of canceled that series. The issue with the DC is that James Gunn is taking over, but the thing is they got 3 films from I guess the old DC universe that are still coming out. So I think they're just I think they'll have some growing pains. I think they had some issue. They wanted to merge the Discovery Plus and the HBO Max. They will merge part of that, but Discovery Plus will still have its own app because I think there were fear of losing those subscribers because moving them up to a higher package.
Also, they're filming The Joker 2, which was quite critically well received last time, so that could be another boost as well.
That's true. Yeah, the Discovery part, I think they should have merged that a while back. But it seems like a lot of the mistakes that management made a while back, they're finally saying, okay, we should have done this a long time ago. Let's do it now. I do know they're also, I heard about Joker 2. That should be good. I hope they lean into the franchises or at least the like specific types of movies, the specific titles within certain franchises. I hope they lean into those more versus just trying to like shotgun and be like, who wants to see Aquaman? Who wants to see this guy? I don't even remember their other movies. So I think if they do that, just say like, okay, what did well? Let's just lean into that and let's make sure we have good directors and good developers, for our content. I think it'll be okay. I know they're working on. I think they're about to roll out a like free streaming service that has advertisements similar to Tubi. I don't know how much money that generates, but that would be something to look into as well, because it should be like net, positive, right? Like net profit for that service. So that should help. I don't know. Guess we'll see on that too.
Side question: barring like a third world war, what are your thoughts on leaps for Stellantis? Because that thing is still moving up.
I am going to. Stellantis is like a company. It's like I'm put it in like 20% of my monthly paycheck, you know? Like not really, but like that I would really like it to drop. World War III, great. Hope Stellantis plummets 80% so I can buy, 10% of the company. But it's still really undervalued. It's a growth EV company that's trading below book value. It's amazing to me. The dividend is secure. The valuation just looks like stupid cheap. It's trading at 1.2 times forward enterprise value to EBITDA.
Yeah, I mean,
0.2 times enterprise value to sales.
they
Crazy.
should be easily worth as much or more than Ford and GM, and I don't understand why. I mean, I was in it back when they were like $11. I got out because it wouldn't move. I was an idiot, soggy hands and whatnot. But are you? I
Nice.
mean, how do the calls look, or are you just holding shares?
The calls are actually well. Let me double check before I say this. Last I checked, the calls, which was like yesterday, the calls were really cheap for a stock that has moved. I mean, what has it moved like? Something like 60% since October.
Yeah, they were super cheap when I had them last time, but they still look cheap now.
Yeah, the strike 20 calls for June, annualized cost of 5.76%. Super cheap. That's not that far out of the money. But I guess we'll look at the money. So it's at 18 now. Oh wow. Yeah, for a stock that has moved this much, it's really not that bad. The leaps for January, you got a 9.5% annualized cost at strike 17.5, annualized 7% cost for strike 20. That's damn good. So I like the calls. I've been chasing the share price up, selling puts. Now I'm selling put spreads. I even sold put spreads in the money, and those are now out of the money. This literally keeps happening. The stock price is running away from me. So I'm supplementing those puts and those cash secured puts and put spreads with calls. Like I'm buying calls every time I sell those.
Is this thing working?
Yes, it is.
Hi there, people. I'm still learning quite a bit, but I have a question about a stock that I saw with all the EV stuff happening. Wallbox. I was just wondering if
Got a
anyone
lot
had
of
any
noise.
opinions.
Can't understand what you're saying.
Okay. How's it now?
Much better.
Oh, okay. I was wondering if anyone had any opinions on a stock called Wallbox with all this EV stuff going on. They basically make electronic chargers. I think they're like a third-party distributor, maybe. I don't know.
You got a ticker?
WBX.
I've literally never heard of them. I don't know if anyone else has.
Yeah, me neither.
I own the product. It's actually one of the
it's
better
a wall
selling
charger.
ones. Yep. I spoke with a company about 6 months ago, and about a job, and then they went on a big hiring freeze. So, for what that's worth, but the product is a good product. Sells really well on Amazon. It's one of the better selling wall chargers on Amazon.
So what is this, like a wall mounted battery that you can charge with your solar?
Just
or
EV
something?
charger. EV charger, no battery.
Oh.
Just charge. They have just for basically generic any EV can plug into it.
But
for
when
in-home
you-
installation.
When you buy an EV, don't you get a charger? Or I don't know shit about EVs, honestly.
You do not get a charger. Tesla used to include portable mobile one. They stopped, I think, about a year ago. So most people that buy an EV have to have one installed at their house or use superchargers or something like that. But most people will have one installed at their house to charge, overnight or once a week, whatever. And this company sells those chargers along with other people, but they do really well on. They have a lot of social media and they have a good brand behind them. And the product, they also build bigger ones for like parking lots and things like that. They have in-home ones as well as other ones.
that's got to be a pretty saturated market, right? I mean, you said most they sell well on Amazon, or
They are highly rated and one of the better selling ones that Amazon like sells. But the market, you're right, the market is saturated. The EV manufacturers sell their own, and then there are many third party ones that are out there. But this is one of the kind of up and coming chargers or brands. I do not own the stock, but I have looked at it in the past when I talked to them.
All right, I got to go wash my cornhole. So I hope everyone has a good day.
later, dude. Yeah,
Looking
I'm out.
forward to
Well,
Warner Bros. Earnings.
Mass, did you have any readings this morning? I see you're up. Haven't heard from you.
You know what we haven't had? An add to the Discord. Where's the Discord ad?
I know all the real mods left. Yeah, there's Discord, there's Casino, there's chatting, there's DD, there's AI for fun, there's debauchery, there's memes, there's hugs. It's okay over there. I don't know if it's on the chat, but it is on the Wall Street Bets feed. If you go over one, go ahead.
We also got some pumps. We got some dumps. We got everything in there.
Yeah, again, there was a lot of loss pouring yesterday when the Nvidia bears were getting beat up, unfortunately. So come join.
Who's excited about Cardano?
For their
Yeah, I'm excited for them to file bankruptcy.
I was just looking at them. I'm thinking about putting some puts on.
Don't they have a huge note coming due this September or October 2023? They got their bonds coming up. They're gonna have to buy back. And I don't think they're gonna plan on doing that.
I don't know the exact mechanics, but I do know the family basically said, they took the poison pill, saying we're not gonna. Basically, not. They did something that the creditors didn't like last time, and saying, yeah, maybe we won't claim bankruptcy. We'll just drag this on forever if we can. But they don't have any cash. They're gonna have to, especially if, like you're saying, if they start missing bond payments.
They're losing money like crazy. Holy fuck.
Yes, sir. That's what happens when you run an honest business like Carvana.
Does anybody know what happened with all the lawsuits that they had?
Pretty sure they're still ongoing.
Are they still banned from selling in certain states?
Not sure about that. Not sure.
Yeah, there are some states. Yeah, basically they're trying to save their local businesses. So I just literally read one yesterday that Illinois is going forward with one. They don't have one. So yeah, there are some states that already have it, and others that are trying to move forward. It's like what happened with Tesla. They're like, no, you need to have a dealership. You can't just sell them ad hoc in our state.
Well, I heard that they weren't delivering the titles. People were buying cars, and like 2 months later, they can't get a title for it or register it.
I don't know, but I did used to work in the car business, and poorly run dealerships that happens. So it's not uncommon in the business, but I'm sure with their rise and everything and social media now, you probably caught more wind of it. But I don't know of any specific story.
Anybody here got a good old towel play? Some nice towels? Any puts? Any bag holders in the house?
Raising my hand.
Oh, okay. Mr. Towel, want to tell us about your towels?
I'm still holding my position. 1,500 shares at $8
Okay.
cost basis.
Wait, what's the cost basis?
Dollars.
I think he said $8 if I heard him
Oh,
correct.
$8. I thought he said $1, like $1. Okay, $8.
Oh my god, I
okay.
wish.
Okay,
What was
that's
the ticker?
BBY.
BBBY.
I don't think a lot of us really play that. We joke about it more.
Oh, a lot of people played it when that spike that recently happened in February 6th this month.
I thought it was gonna keep on running. I bought more shares and boom.
Yeah, a lot of people thought so too.
Rock bull, call him motherfucker.